Welcome back. U.S. futures are pointing to a lower open after breaking a 4-day gaining streak amid stagflation fears. However, our next guest says there are many reasons to remain optimistic in the face of all this negative sentiment. For more, let's bring in Rob Tetro, Senior Investment Advisor and Senior Portfolio Manager at Tetrault Wealth Advisory Group, Canaccord Genuity. Thank you so much for joining us. Tell me, what do you make of this break that we have in the winning streak for the S&P?
I think the break is, anytime you see this much movement this quick, I think you're expecting some sort of reversion to the mean, although we have tried to push at this kind of notion of 4,100 on the S&P for a while, and it looks like it's trying to break through now on a technical side. Now, I'm not a technical specialist by any stretch, but it's something we look at. I do think you might see a little bit of a breather here over the next few weeks or a few months. But as you mentioned in the open, Kumutha, I'm definitely, there are many reasons to remain bullish for the rest of 2023, even with what we've seen in the first quarter.
So which sectors are you interested in? Because crypto was a breakout star of Q1. Moving into Q2, do you think it's still going to be one of those drivers for investors who are looking for alternative assets?
Yeah, crypto's a tough one because everyone wants to own it when it's doing unbelievably well. But on the retail client side, they tend to not really appreciate and understand the risk when it drops by 50, 60, 80%. I have said on this show before in the past that for certain individuals, for certain individuals who can handle some speculation and they have a high risk tolerance, it can make sense to have 1 or 2 or 3% asset allocation to crypto. I've said it years and years ago, not because I think that it's going to completely change the world and the entire world's going to shift, but I think there's going to be an asset allocation shift with mutual funds and ETFs and just funds going there over the next 3, 4, 5 years. And I think this most recent run is due to the crypto halving, which happens I think it's 4 years. I'm not a crypto expert, but I think it's every 4 years. So you're seeing less supply of crypto. And I think this bull market is likely to continue for crypto.
Okay. Speaking of those banking contagion fears that help sort of precipitate the growth and demand for crypto over Q1, what do you see heading forward, and how does it relate to the S&P's correlation in terms of Q2 performance?
Okay, so if we look at the S&P 500 after a 7% gain in the first quarter, the full year in the last 80 years, it's happened, I believe, 20 times or something like that. The average has been about 23% total return. In other words, a bull market in Q1 is usually a strong indicator for the rest of the year. April, historically strong month. We know that the S&P 500 does well in April, and in years of election years, it does really, really well. We're in a pre-election year 3 of an election cycle. That's a good sign for the market. If I keep going through some of these kind of long-term historical indicators, another one that is really solid is 2 consecutive positive quarters of gains typically will equal a new bull market. A bear market typically doesn't continue after 2 consecutive positive quarters. It kind of stops and you get the start of a bull market. The breakthrough on the SPY, I think, is something that matters. And I guess the last point I'll make here is that when stocks stay above their December lows for the entire first quarter, that is a strong bullish cycle, 95% of the time positive over the last 80 years, to the tune of an average of about 18% return for that year. These are just historical things that I've looked at, I think are valuable to keep an eye on. And there's so much negative sentiment. Sometimes you need to take perspective that, hey, there's still reasons to be positive here.
And looking at that negative sentiment, particularly as it relates to financial stocks, we've seen a lot of volatility over the last few weeks. And according to some analysts, it's not over. 2023 is very much going to be colored by a lot of those concerns in the marketplace. What do you say to that?
It's definitely going to be colored, absolutely, with those concerns. I think you can't escape it. Whenever you have what happened to SVB and the other regional banks happen, you're creating that fear that my money's not safe. And you can't just get rid of that overnight. It doesn't just disappear. This doesn't fall off the news immediately. It remains in the news cycle. It's talked about at cocktail parties. The sentiment remains for retail investors. And I think that fear of, is my money safe, is going to mark the entire 2023 year. However, does that mean that the Canadian banks of the world, the large U.S. banks, are going to be less profitable because of it? I think not. I think it's largely noise for the most part, unless you actually had capital in those banks and you're potentially going to lose some money, which isn't funny. Sorry, but aside from that, I don't think it's a reason to run from Canadian banks.
I mean, overly confident to say the least. But let's talk about this election cycle we're heading into right now. How is that going to weigh or potentially weigh on any consensus view when it comes to investor momentum?
Okay, so historically, it's a positive trend. Year three of the election cycle, and I think we know why. There's a bunch of promises by the incoming president who's infrastructure announcements, typically large spending, some stimulus. It's good news for everyone. It happens in Canada as well. Anytime you see an election coming up, you get these promises of government spending, which leads to more jobs, which leads to positive economic sentiment, more money, stronger stock market. That happens historically in year three of the U.S. market. It's going to happen this year, in my view. And now, a president just got, what a crazy media day yesterday was for President Trump, I guess, former President Trump. And is that noise? I believe that's noise as well. I don't really care that much for the market with respect to what's happening there. But year four of the election cycle, which is next year, leads to a totally different market sentiment.
Okay, and are you seeing any glimmers of something that could potentially drive action, or your clients coming to you and saying we need to reassess how our portfolios are diversified?
So for us, we always have a strong asset allocation to alternative assets, whether it's private real estate, private infrastructure, farmland. You just had the CEO of Nutrien on. I'm a big believer that is an asset class that Canadians should own, and they can own it through a portfolio manager like myself. Music royalties, a whole bunch of alternative assets. We believe in owning that. So less equities, more alternative assets, and less fixed income. That's our asset allocation. That's our mantra, and that's how we're going to continue to manage over the next market cycle here.
Okay.